Hey, it's David with National Credit Care and welcome to the Tuesday topic. Today I'm going to cover what is your credit score. Your credit score is a 3-digit number that controls so much of your financial life. Banks and lenders are going to use those 3 digits to determine whether they should loan you money, and if they do loan you money, how much it's going to cost you. The lower your score is, the higher of an interest rate you're going to get charged because you pose a higher risk to the bank. There's a better chance you're going to go late and that you're not going to pay them back. The higher your credit score is, the less of a risk you pose, and that's when the bank's going to give you a lower interest rate, which will save you a ton of money because there's a better chance that you're going to pay the bank back. Now, there's 3 credit bureaus: Experian, TransUnion, Equifax. So you're going to have a credit score that's generated from each of those credit bureaus. On top of that, there's over 60 different ways that you can calculate a credit score. So when you're applying for an auto loan, they're using a very specific algorithm or formula to determine if you're going to be able to repay your auto loan. Same thing with a credit card or a mortgage. There's so many different types of credit scores out there, which is confusing for a lot of people. So if you have any questions on, hey, do I really have a good auto score or a credit card score or a mortgage score, give us a call. We'd love to dive into that for you, take a look at your report and answer any of those specific questions. As always, if you have any questions or comments, anything you want to hear us talk about, comment below and make sure to share this with your friends and family so we can help them out as well.